So here's something interesting. Every once in a while, the stock market gives us a play that makes people stop scrolling. And Opendoor is looking like one of those plays. But here's the crazy part. There's no massive breaking news, no SEC filing, no sudden company announcement, and yet the stock is moving. That's exactly why we need to dig into what's really happening here. Because if you're watching this right now, chances are you've seen Opendoor's name pop up, and you're wondering, is this the moment to pay attention, or just another false alarm? Stick with me, because the next few minutes could give you a very different perspective on this stock. So today, Opendoor ticked higher by about 1.3%, closing around $7.83. The trading range was between $7.83 and $8.33 on a volume of about 117 million shares. That's lighter than the usual 372 million average, but still a very active session. And here's what's interesting. The move isn't being powered by company-specific news. It's being pulled up by the broader AI rally that's pushing the market higher. That AI enthusiasm is acting like a tide lifting a lot of stocks, and Opendoor is definitely benefiting. From the company itself, though, there's not much to report. No new filings, no game-changing press releases. The only piece of activity we saw was around hiring. Opendoor's CEO Kaz went on social media encouraging people to send him resumes and join the company. That's a signal of expansion, sure, but it's not the kind of headline that usually moves a stock by itself. So if that's not what's fueling the movement, then what is? Let's dig a little deeper. The real push came from economic data. The Challenger job cuts report showed only 54,000 cuts, compared to forecasts of 150,000. That's a huge difference, and it gave the market confidence that the economy is stronger than expected. Combine that with the Federal Reserve outlook, and you get momentum. Right now, the market is pricing in a 97.8% chance of a 25 basis point rate cut by the end of the week. Yesterday, there was still some chatter about a possible 50 basis point cut, but that quickly faded. The smaller, more cautious cut seems almost guaranteed, and that's enough to keep bulls energized. Now let's talk about something that could actually hurt sentiment: CEO activity on social media. Kaz has been vocal, maybe too vocal. Recently, he criticized Canada's startup visa program, which is strange given Opendoor's possible need for regulatory cooperation in Canada. This kind of public stance could backfire, especially when government approvals are crucial for future expansion. Elon Musk might get away with controversial posts because of his stature and Tesla's cult following, but Kaz doesn't have that same leeway. For Opendoor, every public statement matters, and unnecessary controversy could spook investors. Meanwhile, the shorts are circling. About 20% of Opendoor's float, roughly 143 million shares, is currently shorted. That's a big number. And in today's options activity, the bears dominated, with more than half of the flow leaning negative. One notable trade even bet that the stock wouldn't get past $8.50 this week. That kind of positioning shows how aggressively some traders are betting against the upside. Technically, Opendoor is battling its 10-day moving average at $8.34. Today's high was $8.33, so it came right up against that level and failed to break through. If it clears that barrier, the next range looks like $9 to $12, according to Elliott Wave Technicals. That could be a meaningful move, but it will take real buying pressure, not just short covering or algorithmic trading. And right now, algorithms seem to be the dominant force. They're the ones suppressing upward movement based on the smaller, high-frequency trades we saw across the tape. So what does big money think? Interestingly, hedge funds don't appear too bullish. There were some articles digesting Opendoor's updated business model, including changes around 7-day and 100-day terms. But the reaction hasn't been enthusiastic. The lack of analyst upgrades or bullish ratings explains why the stock isn't sitting at $9 or $10 already. On top of that, potential legal risks tied to Opendoor's strategy make some institutions hesitant. That cautious stance keeps a ceiling on the stock for now. Looking further out, though, there's a major rule change coming that could benefit Opendoor. Starting in 2026, hedge funds will be required to disclose short positions through new SEC transparency rules. When that happens, the market will have a clearer view of who's betting against stocks like Opendoor. That extra visibility could shake up the dynamic and force shorts to play differently. For now, it's business as usual, but long-term investors should definitely keep that in mind. On the dark pool side, there's been steady activity, plenty of transactions, but nothing dramatically bullish or bearish. The big takeaway is that algorithms and shorts continue to influence intraday movement, while retail traders and smaller funds provide pockets of buying. All of that adds up to the tug-of-war we saw today, a stock pressing against resistance but unable to break through. So where does that leave us? In the short term, Opendoor looks stuck between $7.50 and $8.50. Bulls are hoping for a breakout towards $9 and beyond, while bears are pressing for another slide under $7.50. In the bigger picture, though, the stock could absolutely run if momentum shifts, especially with AI enthusiasm carrying the broader market. But make no mistake, this is still a high-risk, high-reward play. Now I want to hear from you. Are you buying, are you selling, or just watching from the sidelines? Do you think Opendoor is an undervalued momentum stock waiting to break out, or is it just another short target in a fragile market? Drop your thoughts below. I read every comment. And before we wrap up, quick reminder. This video is for educational purposes only, not financial advice. Always do your own research before making investment decisions. If you found this breakdown useful, hit that thumbs up, share it with someone who follows the market, and subscribe for more updates. Because trust me, the next few weeks could be very, very interesting for Opendoor.